Happy Thanksgiving, class. Hoping you have a good little break. Wishing you best in your travels or whatever you may be doing during the break. Hope you have a good time. And it's a busy week for school stuff too. I'm not sure why they set it up this way. Your workload from last week would have been a little bit better versus what it is for this week. So hope you get everything done. If you got any questions, you can always still email me, text me, call me, and see what I can do to help. Your spreadsheets last week were solid. I think we had 8 20s out of the 32, and those that got 20s were those that more than anything put forth a little extra effort in writing out explanations as to why they decided to do the type of investments and their goals, specifics on their objectives. And so that's why everything else that was kind of just status quo, we were somewhere in the B range. Not that it was wrong, it's just wasn't quite a perfect score. So anyway, this week we're talking about life insurance, your insurance plan. And a quick rundown on life insurance. I've been dealing with life insurance now for over 10 years. And my very first life insurance policy I purchased was a term life policy. My wife was pregnant with our first child. We were living in Rexburg. I had just graduated and she was in her last semester or two. And I bought a little term policy for $250,000 death benefit. I think it cost me $17 a month. And you had that for a couple of years, and then once got a kid or two, a mortgage, I upped it, and I've upped it another couple different times since then. So the best thing about term insurance is the price and the cost of it is inexpensive. Right now, if you're in your mid-20s, good health, you can get $1 million 10-year term policy about $25 a month. 20-year going to be $35 to $40 a month. And so that can give you a lot of good protection and coverage during these formative years of your career and family. Term insurance is just like renting. You get the benefit if you pass away. That is the only way you benefit from it. If you do not pass away and your term comes up at 10 years or 20 years, you can continue on it at a much higher rate, or you're going to have to buy a new policy, which most people do. Interesting statistic, 2 out of 100 term policies are ever collected on. So only 2 out of 100. And so 98 out of 100 term policies, the insurance company is making substantial money on. And that is, insurance companies love term insurance because there's only a 2% chance they're ever going to pay anything out on it. At the same time, the cost of it, the mitigating risk, and gives you lots of opportunity. Just make sure you're covered, your family's covered. One of the saddest things I ever see is when a young family, a couple kids, more times it's the breadwinner passes away and they don't have life insurance. And in the middle of all the mourning and difficulties that go along with losing a spouse or a father, the extra pressure and stress that is heaped upon the family because of financial needs makes things so much worse. And so, big proponent of making sure you have life insurance, and it is very, very doable. The other type, a lot of times, you get to the permanent. Here it's giving you the option of whole life. There's also universal life. And it could be index universal life or variable universal life. It's kind of a hybrid between whole life and term, where it's not quite as expensive. It has the opportunity to be permanent. The whole life insurance, you can see right here between the two, $41 a month versus $675 a month. What they're mainly doing is they're going to take a portion of this $675, and that is going to purchase the insurance on the $1.25, and the rest is going to go into cash. And we'll be able to accumulate over time. You'll be able to get access to it, borrow from it, and if done right, it can also act as a retirement vehicle. One of the benefits of whole life is that the money you take from it is essentially tax-free. And a lot of people, I have some clients that are doctors, and they're pumping thousands of dollars a month into a whole life policy, a low death benefit, high cash value, with the whole intent and purpose of it being used for retirement. They can be able to withdraw $10,000 a month out of the policy during 20, 25 years worth of retirement, and it's tax free, and that will be greatly subsidized or be a decent part of their retirement income. Whole life, as long as you keep paying the premium once you have it, it's always going to be good. And so it can be the one or the last life insurance policy you need to buy, because it will last. Whole life insurance depends on your situation. I think it is a good product. I am not one that thinks it's for everybody by any means. I see far too many people that get into a whole life policy spending a couple $100 a month, and after 6 months, 12 months, 2 years, they drop it because they just can't afford it and they're left with nothing. And so they spend a few $1,000s and just use it for 1 year, 2 years. And it would have been so much better off saving all that money and just buying a term policy. But if you have a real purpose of whole life insurance, or financially you're in a good position to purchase it, it can really be a great tool. As far as projecting your needs, the multiplier approach is a very simple approach. It doesn't have much technical anything technical as far as how you're working with it. You're just taking what your income is, multiplying it by 10 years or 20 years or whatever you want it to do. The needs-based is much better approach to look at because it factors in your debts, factors in income replacement. You'd be amazed in a situation like this, if you had $450,000, had a mortgage, had a few children, that would go so fast. It might last you or your family 3-4 years. And so I'm much more inclined to go with the needs-based approach, just because it gives you so much more flexibility. A good friend of mine, that we were talking about life insurance, and he wanted to go a little bit higher. He has a business, he's got 3 kids, his wife, and he wanted $3 million of life insurance, and it exceeded his assets slightly. And he said, my biggest thing is I don't want my wife to be left rich, but I also want to make sure she's left in a situation where she doesn't feel the urgent need to go out and get married to maybe someone that isn't the best fit for her and my kids, just because she's needing financial security. And so life insurance can do that. It can help alleviate the financial stress significantly, give them freedom, flexibility, and can leave you knowing that you did your part as a provider for your family. It's a pretty big part of anybody's financial plan, making sure you have insurances. One of the first week, Marvin J. Ashton gave his 12 steps to financial freedom, financial security, and life insurance was one on his list, saying you have to make sure you are insured for your life, for your home, things like that. So it's something we need to do. If you have questions on anything life insurance related, please give me a call or an email. Got any question on the spreadsheet? Again, down here, it mentions that you don't have to fill out the whole life portion if you were not interested in looking into whole life. If you are sold Dave Ramsey style 100% on term insurance, and you never want to look at whole life, then you don't have to worry about that. But please give an explanation for that, so I know that you didn't just skip it, that there was a reason to you not putting stuff there. Again, specifics, details are always going to get you a better grade. Anyway, class, hope you have a very happy Thanksgiving, and talk to you next week.